The Federal Housing Finance Agency will allow applicants to use a Vantage score credit score for mortgages sold to Fannie Mae and Freddie Mac. That decision, the aim is to increase competition in the credit score market and expand access to mortgages. Joining me to discuss what this news means for would-be homebuyers is Silvio Tavares, Vantage Score CEO and president. Obviously, it's good news for you guys, Silvio, so congratulations to you on this front. But this is a big change. The so-called FICO score has been sort of the benchmark within the mortgage market for a long time. So how Vantage Score scores folks different from that traditional method?
Well, thank you, Julie, and great to be on with you. The simple answer to your question is Vantage Score includes many more consumers, about 33 million more consumers, and about a third of that group are actually going to have a Vantage Score 620 or and above, which means that many more consumers for the first time are going to have the opportunity to have a Fannie or Freddie Mac backed mortgage. It's a huge, huge change. It's going to include more people that have been left behind. And it's a benefit not just for competition, but also for many American home buyers who are going to get their first chance to own a home.
Wow. Major news that has come out regarding some competition to the big three, the FICO 2, 4, and 5 model. It's going to be a game changer. I have heard pros and cons over the last week from, the naysayers saying that, the sky's going to fall because all of these unimproved or unworthy borrowers are now going to have access to credit, all the way up to the very optimistic. As always, we want to try to be balanced and look at this situation to see if it's going to be a good thing. More importantly, to see if it can help you if you're falling prey or victim to the old way of doing things, the FICO 2, 4, and 5. So that's what we're going to break down on this video. Before we do so, if you do not know me, my name is Robert. And on this channel, we focus on simplifying the home loan process. Also, take a few seconds, hit the like, subscribe, and the notification bell so that you'll be notified when we bring content like this to the channel. Let's get into the video.
Silvio, there are always a lot of tips that people like to offer how to boost your credit score. If they're looking specifically through the Vantage Score lens, how would they go about doing that?
Well, one of the big differences with Vantage Score, one of the reasons why it's more modern and why the FHFA has approved it, and we thank Director Pulte for making this decisive decision yesterday. One of the things that's different about us is we include alternative data. If you ask the average American, hey, if I pay my rent on time for 10 years, does that boost my credit score? Most consumers would think the answer is yes, but for our competitor score, the answer is no. For Vantage Score, we include that rental data. It's obvious that that actually is a big indicator of credit worthiness. And as a result, many consumers are going to have a higher Vantage Score and actually have a credit score for the first time by doing things like reporting their rental data to their credit score. We're the only major national score that does that. We're the first to do it. We also use very innovative new analytics techniques, and we're the first credit score to do that.
Yeah, so he's making some very good points about the differences between the Vantage scoring model and the FICO versions that we use in the mortgage industry, version 2, 4, and 5. And I think it's going to be very exciting, especially for those qualified people that for whatever reason have a thin credit file or are unbanked. That's a very important term. But in my opinion, the big difference is going to be in the trended data. That's one of the things that they've pioneered, meaning the Vantage scoring model. And it's simply, you can look at it like this. Let's say, like he said, over a 10-year period, if you've made your rental payments on time, shouldn't that account for something? Especially if you're looking to buy a home as far as mortgages are concerned. That's the best indicator of future behavior when it comes to where you're living. So what that model is going to do by now adding the rental component to your credit report, if you're doing it, it's actually going to affect the actual score. get you up over that 620 model or even higher. Opposed to now on FICO version 2, 4, and 5, I tell people all the time, you could save that money because that's an additional cost either by the landlord or some third party company charging you money to add on your rental payments to the credit report. And it's really not making a difference in the actual scoring model when it comes to FICO 2, 4, and 5, in my professional opinion. And so another thing is the weighting. Okay. So as you look at the trend on how you've paid something, another key point is when we look at the weighting of, say, payment history on the FICO model, the payment history is weighted at 35%. If you look at the graph that he showed earlier on the Vantage scoring model, it's 41% of the payment history. It's going to be 20% of your credit depth, right, or mix. Utilization is 11% of how you use your credit. And then how recent, the recent credit is a 6% weighting on balances and then 2% on available credit. So on the FICO version, you have 35% for payment, 30% based upon the amount owed, 15% on the length of time, 10% for new credit, and then 10% for the mix. So the weightings are different, which is going to also benefit the score. But more importantly, before we get back into it, it's how they're looking at the trend. So that trend could help you or hurt you. So for all of the naysayers out there that want to say, well, you're going to qualify all these unqualified people to buy a home, that's BS. I think the trended data is a better indicator of identifying potential problems if something is going on with a person, opposed to FICO, because FICO just takes a Polaroid, a snapshot, or a selfie at a certain period of time. The trended data, they're going to go back and look at a 24-month history. So it could be a pro, it could be a con. I like to see how some of these other costs are going to be associated, or if, say, at the utility level, if you add your utilities onto the credit report, is that something that's going to be done there at the actual utility, water, lights, so on and so forth, or are you going to have to pay a third-party company? So kind of have to watch those as well. But super exciting for a lot of folks to get onto the property ladder. And so let's continue to listen to the CEO and see if he brings anything else out that we need to discuss.
Silvio, so put some numbers on it for me. How many people overall, and maybe underbanked people specifically, may be in a position to become home buyers as a result of this?
Well, we estimate that of the 33 million in total that Vantage Score provides a credit score that don't have a credit score with our competitor, approximately 4.9 million of that group would be mortgage eligible. These are consumers with a Vantage Score of 620 or above. 620 is basically the minimum number that you need to qualify for a mortgage. And if you think about 1.83 adults in the typical household between ages 25 and 65, that adds up to $1 trillion in incremental mortgages in the United States. So this is a big, big deal. We're even more happy for the millions of forgotten Americans that are actually creditworthy and are going to get their first chance at a mortgage. Owning a home is a really key pathway to economic prosperity in America. It's a core part of the American dream, and we are just really excited to be a small contribution to enabling more people to get access to a mortgage and own their first home.
Yeah, so if you've been tracking the sentiment that's online here recently, you hear all the doomers saying all of this inventory is coming online and the market is going to crash. And you've heard us over here on this channel say we're nowhere near the 2008 to 2012 cycle where thousands and thousands of homes had to be taken off of the market. Thus, we had the big dips in certain areas as far as value is concerned. We don't have that situation. This further makes my point here on this channel that there's still not enough inventory. We have another 5 million people based upon this change that FHFA, which is the head of conventional loans, are the government sponsored entities, GSEs, Fannie Mae, Freddie Mac. All of these or this video is not pertaining to FHA, VA, and USDA government-backed loans, but conventional loans. But I digress. There's another 5 million or 4.9 million to be exact, based upon their estimation, out of that 33 million people that this Vantage score is going to help increase the scores, that are ready and able. Not they don't want to buy a house if they could, but they can. They use the term underbanked. I said unbanked earlier. The correct term is underbanked. And the definition is it refers to individuals who have a bank account but still rely on alternative financial services to meet some of their financial needs. Okay. Services like check cashing services, payday loans, money orders, and other non-traditional financial products. So all of those industries are going to be hurt as well, because they make a ton of money off of these people charging exorbitant rates. Moreover, a lot of folks go this route because of the lack of financial literacy. That's why these videos are so important. So back to my point, there's 5 million people that now can buy, because with the Vantage score, you only have to have a trade line open for 1 month, opposed to the FICO 2, 4, and 5 models on the mortgage side. It's got to be open for 6 months. Okay. Now you can look at your rental history and you could go back and see the trend and help with the score. You can see how these things are going to help with getting a lot of folks an opportunity to get onto the property ladder. This is why I'm saying to you all that have had credit scores and just waiting and waiting and waiting. It's competition. That's one thing he's going to hit on, I believe, here before we get out of the video, that now that there's competition with the Vantage score and FICO 2, 4, and 5, they somewhat had a monopoly over all of these years. Now there's an option for lenders to use. And I'm not saying it's going to be put in full effect today, but the change has been made to give them the opportunity, and more people will have opportunities to get into the housing market. More dollars chasing less goods. That's why you see these prices where they are, and they're going to continue to go up. If you're on the sideline, get with the lender that you know, like, and trust, and get in while you have an opportunity. This is not a sales pitch. It's facts. Let's keep going.
Silvio, just quickly, this rule change, if I understand it correctly, it does still give leeway for the FICO score to be used. It's more that it gives a choice, right? So how then will that choice be made, and what gives you the confidence that Vantage score is the score that's going to be used?
Well, that confidence comes from the fact that in every segment where we've been able to compete, we have typically become the number 1 or 2 credit score provider. It's not well known, but over 3,700 banks, fintechs, credit unions, and government agencies use the Vantage score today. The only reason why until yesterday Vantage score was not used in mortgage is because of an unintended monopoly that was given to our competitor. That monopoly has now been demolished, and that means we're going to be able to compete because Vantage score's score is more inclusive and is also much more modern and much more advanced and more predictive.
I'm not saying that this is going to change tomorrow. Lenders are going to have an option, but what I'm saying is more competition is coming. More qualified people are now going to have an opportunity to get onto the property ladder, which is still one of the best ways to build wealth in these United States. So if that's you and you need to go a little deeper in your specific situation, my contact information is pinned in the top comment or the description below. Love to have a conversation with you to see if we're a fit. But regardless if it's me or not, get with your lender today. Stop kicking the can down the road, because if you continue to do so, a lot of folks are not going to be able to get onto the property ladder, and it's going to be a problem for your future self. Watch this next video, and we'll talk to you on the next time. Indeed.